Good morning. You're watching The Market right here in 80 now with me, Aisha Faridi, Nikunj Dalmia, Avan Dabash on the show. And let's just walk you through what the truncated last week looked like, Nikunj. While you were away, we did, actually quite well. We managed to eke out a solid gain, managed to almost touch that 17,600 print. No major positive cues. The positive bias, though, in the markets continues. Overnight, of course, or rather over the weekend, you've seen a strong US jobs data. The unemployment has fallen. Russia has said that it's going to be cutting oil output by about almost 700,000 barrels per day in the month of March, or rather, that's what's been accounted for. And for the week gone by, we've managed to do pretty okay. The policy behind us on the brink of earnings season and not looking all that bad.
Yeah, the lull and the dull phase, frankly, is over, if you ask me, both for Indian markets and for global markets. Globally, the news which was centered around US banking crisis, that has faded away. And locally, markets are no longer worried about what will happen to inflation and what will happen to a tiny group of stocks. So in my book, there were three concerns. I'm just jotting them down in the morning, which were dragging Indian markets down. Valuations, which are not that extended. Inflation, well, the RBI, the fact that they've hit a pause button clearly means that the worst of the inflation print is behind us. And third, I would say flows, which were against us in the month of Jan and Feb and early March, that is also reversing. So the three concerns which were accounting for a large part of India's underperformance, they are getting addressed. And if those three concerns are getting addressed, will Indian markets now, rather than outperforming, be in line with global markets? I would say yes. So my view is, or our view is simple, that after weeks and months of underperformance, looks like Indian markets now could really be mapping the global mood point or the global market. If global markets are weak, of course you will not outperform. But the underperformance, what has been the stark feature for this year and the annoying feature for this year, I think looks like that is behind us.
Yeah, even if you were to stack up how the emerging markets, or for that matter, our Asian peers have done as opposed to what we've done in the week gone by, in the last three trading sessions alone, we almost managed to eke out about almost 1.5% or so. China, 1.1% gain. Hong Kong was very minuscule at about a 0.3% downtick. Korea was down almost 0.7%, and the MSCI Emerging Market Index as well fell in line by about almost 0.6%. So yes, definitely we were the region performers.
Yes, indeed we were. But just let's take stock, Aisha, of how the global markets shaped up. And yes, you did have Wall Street, which ended the holiday shortened trading week on a pretty okay note. We were in the green at least, and you had quite a bit of data as well that came in terms of the jobs report, a lot of earnings, non-farm payrolls weighted, and Asian markets, barring the Australian region, for now looking fairly robust. It's close to a gain plus when it comes to the Korean markets, for instance. The SGX Nifty, and of course we'll be looking at those adjusted levels largely on the back of the truncated week. And by the way, it's a 4-day trading week this week as well. So going by that, that's the print on the SGX Nifty. And it's going to be critical as well, Nikunj, because as there are a lot of holidays, there's equally important data that we're tracking. And it's big. You've got the numbers coming out, TCS, Infi. Who would have thought that we're back to talking about earnings already?
And this time, Avan, we're approaching the earnings season with very diluted expectations. The market setup is such that nobody is really expecting anything large or anything very incremental from India Inc., at least for the quarter gone by. So the positioning of the market is often very important in understanding the short-term narrative. And if you understand the short-term narrative of the market, the short-term narrative is that expectations are low, and a little bit of beat also could really generate upside momentum. This is an important week because if you will hear from TCS and Infosys, that is one sector where there are concerns. With HDFC Bank, since their quarterly update was already out, you pretty much know that which way things are moving for HDFC Bank per se, and the real big move will only happen once the merger process goes through. But TCS and Infosys, more than anything else, it's the commentary, it's the outlook, which in a sense would be crucial. So you add these three stocks, you're looking at least 15-16% of the weightage, and that is an important weightage considering that we are at the beginning of the earnings season. So that's part one of the story. Part two of the story, I guess, what will differentiate India now is what RBI did. They've hit a pause button. And they've hit a pause button more like Reserve Bank of India this time was able to pull out that April Fool card for everybody. Everyone thought that they will increase rates, and here RBI comes out and say, look, we're not going to increase rates. That makes India very different. While other central bankers are increasing rates, India is the only large economy where the rates have hit a pause button. Incrementally, that's a big hurrah for banks, that's a big hurrah for NBFC, that's a big hurrah for markets per se. Now, if all goes well on the macro front, interest rates technically have peaked out in India. And if they have peaked out in India, it really changed the narrative, at least on the inflation front, on the rate front, completely.
Yeah, absolutely. In fact, in the week gone by, you've already seen outperformance coming in from banks as well as NBFCs. The big question, of course, is whether that outperformance continues this week also or not. But yeah, we've seen a very positive move come in of this pause in the rate hike, like Nikunj rightly pointed out, for wholesale bank and especially for NBFCs. But let's hear out from Sandeep Tandon of Quant Mutual Fund. He sees opportunity in banks, infrastructure, capital goods, and even the pharma sector.
So, in terms of manufacturing, is a very large thesis because we are talking about the way some of the global macros or the global economies are getting affected. So that generates a huge opportunity in India. So because manufacturing itself is a very large theme as a concept, so we like to capitalize on the individual components. Obviously, by default, banking is the first component which becomes very important, both private sector and public sector. That's one important theme. Then if you look at the infra themes is also should do very well. This has been a big most neglected theme for last many years. The stocks opportunities are very limited. Yes, capital goods has moved up significantly and most of stocks are becoming relatively expensive. So I think it's an opportunity in the auto ancillaries, another opportunity one should look at. So capital goods, the large caps names have outperformed and they are expensive, but there are many such opportunities available in a small and mid cap if one to shut down and analyze. So auto ancillary, power, if I have to look at the infra in general, I think these are the larger themes, and this list is can be very large. So one has to spot the opportunity on the individual names rather than saying one sector or one thesis which has played out. So if you really look at, if we are constructive on the infra, then cement by default become the first choice. So we are holding a very large exposure in some of these large cap companies and some of the mid cap companies also. So we are very constructive on the space. This quarter, in terms of volume growth, will be very good, may not be great in terms of margin. But if you look forward, let's say, talk about next 1 or 2 quarters, so going from the, let's say, FY24, financial year 24, I think it should be more constructive because we expect even margin expansion because energy prices has corrected a lot, so which will help them. Demand is anyway picking up. The only concern which we have, that extraordinary capacity announcement which has made by all the players, that they will go to increase their capacity by 30%, 50%, 80%. That is something which is slightly scary at this point in time. But one has to look at whether it really get implemented or this is just an announcement, because to implement this side, it takes time. So from a near-term and medium-term perspective, we are very constructive, but too mature to talk about very long-term thesis given the extraordinary capacity which is being talked about.
It forward with our technical experts. We've seen almost a 600-point rally on the Nifty, almost a 1500-point rally on the bank Nifty. So are we in for more, or this is as good as it gets, at least in the near term? Naresh, the majority of the market participant, at least did not see this kind of a sharp rally coming in. 600 points plus for the Nifty, 1500 points plus for the bank Nifty. Is this as good as it gets?
So I would say this is just the start of it in terms of a bigger trend which is shaping up, because the bottom we made around 16,800, 900 spent quite a lot of time there. It was almost 8 to 10 trading sessions. So such sort of bottoms are generally durable in nature. The only thing is we'll have to take it step by step. So 17,600 to 17,800 is the first milestone in this move. And post that, once we sustain 17,800, that is where it gets into a much bigger move and which could be surprising on the upside. So that's the technical balance as of now. So for now, going forward, 17,400 should act as a support, and 17,800 is the next level. But overall, in this move for the next few sessions, it would be more stock specific. index could take a little bit of a pause in this band for the next few sessions, is my view.
Okay. Kunal, is it a pause, or this could be we could be on the anvil of a short covering rally? There's a difference.
So, Nikunj, short covering has already happened. Majority
already
of the
happened.
short covering has already happened because, I think we were discussing the data last week that there was almost a 45 to 50% reduction of open interest on Bank Nifty. And I think most of the short covering had actually happened just the day prior to the RBI policy event. So the markets went into the RBI policy event on a much lighter note, and then post the RBI policy, we saw the index getting into a bit of a recovery phase from there on itself. So I believe that the short covering, a major part of the that data point is out. We are now settling into a phase where the markets are trading above that 17,500 mark. So we are re-establishing a base on the upside for the indices, both the Nifty and the Bank Nifty. And we are taking a bit of a pause where the mid caps and small caps can tend to outperform. So I think it's a good, healthy phase for the markets where any kind of an intraday dip, 100, 200 point, if it happens on the indices, should be taken as an opportunity to buy.
Right, okay. And Kunal, what is it that you recommend buying then?
So, focusing on large cap names, and especially the two large cap stocks which have actually given fresh breakouts last week. L&T is the first stock which we would recommend to buy. My earlier targets were closer to 22.75 for the stock. It's met those levels. Would revise the targets higher for a fresh trade. 23.25 as a fresh target for L&T. Stop loss at 22.45. And the second would be a buy on Bajaj Auto, maintaining the bullish stance on the stock price, expecting a fresh breakout to 4,100. Stop loss at 39.80.
Okay, Naresh, let's find out what exactly your strategy is. Which stocks are you going with this Monday morning?
So going with a bunch of mid caps. So first is a buy on Indian hotels. Now, if we look at Indian hotels, the stock has made a huge move from 120 to 200 levels all the way to 350 in the previous move up till September, October of 2022. And since then, it has been in a sideways range for the last 6 months, a classical consolidation after a big move. And now the range has got smaller and smaller. So the recent range is 305 to 330. The stock is on verge of that breakout in the near term. Once that breaks out, we should ideally go towards a new all-time high. Expecting this to happen over the next few weeks. A stop loss at 310 and a target price of 360 to start with. Second is a buy on Bharat Electronics, which has been a relative underperformer in the defense pack, but now finally, after a retest, it has started coming towards the breakout zone. So the earlier breakout for the stock was 85.90, went up to 115, retested 85.90 levels, spent a few months out there. And now after this big volume bump up on a single day, the last 3-4 sessions, it has been consolidating around 98, 99 levels, which is the high for the last 3 months. Once this breaks out, we are expecting a move towards a previous all-time high. So starting the target of 115 with the stop loss at 94.
Right. Okay, let's move on and let's talk about all the stocks and sectors which are going to impact the markets this week and, of course, this Monday. And the government has managed to approve significant changes in the pricing regime for domestic natural gas. In fact, Somit is here with an analysis of how it's going to be impacting the gas stocks. Somit?
Well, if you see earlier, the gas pricing was a bit complicated and used to change on a 6-month basis. But from now onwards, the prices will change on a monthly basis, and the pricing will be decided on a very simple thing, and that is 10% of the average Indian crude basket prices for the last 1 month. So say suppose in the last 1 month, the crude prices averaged around $80 per barrel, then the gas prices would be around $8 per MMBTU. And this will be the APM gas prices applicable to all fields. However, for ONGC and Oil India's nominated fields, there is a floor price of $4 and ceiling price of around $6.5 per MMBTU. And this ceiling would be maintained for the next 2 financial years, that is FY24 and FY25, post which it would increase, that is the ceiling price would increase by around $0.25 per MMBTU. Now this is lower than what the Kirit Parikh committee had recommended, but this is pretty much in line with what the street was expecting. Now for gas produced from new well, it has been said that the pricing would be at a premium of around 20% compared to what the APM gas prices are. And for difficult fields, the gas pricing methodology remains the same, and there is no change on that front, which means that for Reliance Industries, the gas prices will be determined on a 6-month basis by PPAC, that is the Gas Petroleum Planning Commission. Now what happens here is for city gas distribution companies, the gas costs come down to around $6.5 per MMBTU from 8.57 that was earlier, and This is because then most of the gas is procured from ONGC and Oil India, and this lower cost gas cost benefit has already been passed on by city gas distribution companies to consumers, which means that the pricing economics of CNG and PNG improves a lot compared to compared to the competing fuels like petrol, diesel, and LPG, which could also lead to higher volume offtake and faster conversion of petrol cars into CNG. Now, for GAIL India, lower gas prices means better profitability for the transmission and the LPG business, and according to analysts, every $1 per MMBTU drop in gas prices improves GAIL's EPS by around 1.5 to 2%. For ONGC and Oil India, this regulation or the gas pricing regulation is expected to be positive over long term, but for short term there could be some negative impact because the gas prices are coming down to around 6.5 from 8.57, and according to analysts, every $1 per MMBTU drop in gas prices impacts ONGC's EPS by around 8.7% and that of Oil India by around 11.5%. But given the fact that there's a floor price of $4, it means that the gas business would remain profitable for both ONGC and Oil India because the cost of production of gas is around $3 to $3.5 per MMBTU.
Right, Samit, we leave it at that. Let's also welcome on board then Dr. Kirit Parikh joining in on the show right now and talk about what he's making of this move of the government. Dr. Parikh, if firstly, congratulations on the recommendations being accepted. And, the mechanism clearly provides a floor and ceiling of $4 and $6.50 on crude. But I understand that it must be a complex formula to begin with to calculate the prices. But as a layman, can one say whether crude goes to 60 or 100 and, gas prices would be within the and a half on the top end and $4 on the lower end range?
So these are a couple of concerns people have, that if you're linking price to crude oil price, and suppose the crude oil price becomes very large, then the gas price, domestic gas price would be higher. But at the same time, we have provided an upper ceiling. And the ceiling is such that even when the crude price or the gas price in the international market goes dramatically down, it would still not be below that ceiling price that we have set. For example, let me elaborate. Suppose the gas price in the US port is $2.5 a million BTU. Then that gas has to be compressed, liquefied first, then put in a tanker, and the tanker is brought to ocean freight across, and then it will be regasified again. That when you do all this, that $2.5 gas will become something like $6.5 in India. So therefore, even when the gas price becomes down, the domestic gas price has to be cannot be above $6.5. So and that's why we have provided a ceiling for that. And when the price goes down significantly, suppose the crude oil price becomes $60 a barrel and gas price then becomes $6. It will still be higher than the $4 that we have provided and lower than the $6.5. So I think we have accounted for these very large fluctuations on international oil prices and international gas prices and tried to stay within that bound so that the consumers get their gas at competitive rates compared to their competitive with respect to their alternative fuels which are possible.
Let's also bring on board then Prabal Sen, VP Equity Research, ICICI Securities. Thank you so much for taking time out. As you just heard our Dr. Parikh talking about accounting really for the international fluctuation in prices, saying that that the ceilings account for this and that the gas prices would be within that range of about $4 to $6.50. What is your first assessment?
Well, I would first like to congratulate Kirit Parikh sir for the very reasonable and fair assumptions which sort of take care of the industry's concerns as well as keeping in mind, keeping them competitive and keeping it attractive enough for new exploration to happen. The government has obviously, accepted the recommendations almost in its entirety, except for the fact that they've tweaked the time period for 6.5 ceiling to remain. I believe, and sir may correct me, but I believe the committee had said that there should be a 50 cent per MMBTU increment on an annualized basis. Instead, what the government has done is kept this price flat for 2 years and then given a 25 cent per MMBTU increase. So in the sense that while there is a linkage to Brent, which is fairly reasonable for the kind of assets that India has for exploration and the ceiling that has been provided, I think it's going to be a positive from both price competitiveness of the CGDs as well as protecting the margins to a certain extent. So it's a fairly positive move for the sector in all accounts.
Okay, Dr. Parekh, in your understanding, what would be the impact of the new pricing for final consumers as of today? Let's say if they were paying 100, will they now pay 90 or 110?
See, the one is to recognize that currently large amount of LPG is imported. So if the LPG price goes up, then the consumers have to pay a higher price. Now what we have done, the consumer price would remain lower than that LPG price. CNG price would be less than that. So if you, for example, if you are cooking with LPG cylinders and if you change over to piped natural gas, you will find that your monthly bill is lower than what it was otherwise earlier with LPG. And the same way would be applied to the CNG users' vehicles. If, for example, even if you are driving a diesel vehicle with a Bharat Standard 6 emission controls, BS6 emission controls, your emissions of CO2 and particulates both would be higher than that of a vehicle which is using compressed natural gas. So it is a desirable use because it will reduce urban air pollution or indoor air pollution in kitchens. And that's why I think in both the cases, the price range is such that it will always be less than the competing fuels that are available.
Right, Mr. Parekh. So finally from you then, Prabal, let's just get in a view as to what your outlook is in terms of stock recommendations.
So we continue to be fairly positive on particularly IGL and MGL. I think if you really see the size or the extent of the price cut that they've actually managed to do because of this reduction in domestic prices, we do believe that the price differential to petrol and diesel prices will actually become much more favorable than it has been. So our sense is that for the next 2 years, volume growth should actually pick up quite substantially, while at the same time, given the combination of these low prices plus the short-term moderation that we are seeing in spot LNG prices as well, even from a margin standpoint, I think earnings growth should see a pickup, and 25 earnings particularly should see some upgrades. We continue to still also think that despite slightly lower prices than currently, ONGC and Oil India are not exactly disincentivized, because for the newer well developments and redevelopment of even existing fields, they have been provided a 20% higher price than this ceiling, which I think is good enough to continue to encourage volume growth. Plus, if you see the net realizations, even at $6.5 to $7, they will still be higher than the last 7-8 year average. If you just take FY22, it would look lower, but from a historical perspective, I think their earning growth will still be definitely higher, particularly with production growth coming in. So IGL, MGL, and ONGC will still remain positive, and GAIL also benefits for its LPG segment because there's a clear cost saving of anywhere between, I think, 400 to 500 crores or so that comes because of the $2 reduction in the gas supply to that segment. So those are the names that I would look at this point of time.
Well, great to have you on the show. Thanks for taking the time out and helping it break down as to what it would really mean for an EPS impact on various companies and the stocks that he's bullish on from the sector. But Dr. Parekh, one final question. As per the regulations, what would be the next timeline for revision, for the next revision, that is?
Well, my understanding is that it should be implemented fairly shortly. I did not see in the press release any specific timeline, but there is no reason to delay it once the cabinet has approved it. Maybe from the first of next month it will start. But this is my guess only, and when it will be implemented depends on the government and the ministry.
Thank you so much, Dr. Parekh, for joining in and giving us all of those details. So we'll be keeping an eye out on all of these oil and gas stocks. Time to shift gears, literally, and talk about the auto space. With the earnings season kicking off, it's Tata Motors that has shared their updates. Pretty optimistic outlook for the JLR arm as well, where the sales have risen in the fourth quarter on the back of improving semiconductor supply. In fact, let's bring on board my colleague Sharad, who joins in with all the latest updates. Morning, Sharad.
Well, yes, in focus we are having Tata Motors as an important update has come from JLR, where the sales for the fourth quarter has increased, and this is also coming in as the chip supply has improved and recovered as well. Now looking at the numbers, the retail sales is up 13% on a year-on-year basis, and when it comes to the order book number, that comes in strong at almost 2 lakh units. However, this is 15,000 slow as compared to the December quarter. Now of course the free cash flow statement, that is expected to be almost 800 million pounds positive. This is for the fourth quarter, and for the whole entire year itself is expected to be around $500 million. It's kind of a thumbs up coming in from the brokerages, as we expect. BofA on Tata Motors, they have given a maintained buy rating with a target price of 475 rupees per share, and they've stated two important things. The first one being, of course, the volume and the free cash flow growth that has been beat, and that has actually beat the overall estimates by the analyst community, and they're expecting that there would be an accelerated deleveraging happening across the board. And apart from this, there's a solid ramp up of the JLR brand expected, and the amount of booking run rate is expected to be better than what the street is estimating. Apart from this, even Goldman Sachs has upgraded the stock to buy from the neutral segment, and the target price is set at 550 rupees per share. And looking at the valuations, the stock is trading at almost 7.4 times its P on its FY25 estimates, and they are expecting that there would be an improved volume outlook going ahead for JLR. And do remember, JLR contributes almost 70% of the total Tata Motors top line. Now looking at the EBITDA numbers, they are expected to be lifted, coming in by almost 15% growth for FY24, and for FY25 is expected to come in more than 16%. And lastly, Goldman Sachs stated that the market is still underestimating JLR's EBIT margin potential going ahead. So overall, we can say a strong thumbs up coming in by the brokerage community.
Okay, we'll leave it at that, Sharad. In the meantime, jewelry maker Titan has also come out with its Q4 business update, and it looks like the company has clocked in healthy double-digit growth across segments. But what is it? What's the Q4 update for Adani Wilmar? Let me take it across to Vinny and get in an update on both Titan as well as Adani Wilmar.
Absolutely. Starting with Titan, let's not forget the jewelry segment accounts for around 80% of the revenue. So jewelry segment has seen a strong growth in terms of double-digit growth, 23% growth on a year-on-year basis on a low base. So let's keep an eye on that, because Kalyan Jewellers, when you look at its Q4 updates, they've seen a 16% growth. So versus peer, yes, we are seeing a better growth coming in for the Indian business. On a sequential basis, yes, we are still seeing a decline coming in terms of the revenue growth, and the sales are down by 21%. What the company highlights is that Jan and Feb saw a strong growth, which was similar to the trends that we saw coming in for the festive season demand. But March, the sales seemed to be a bit weak and subdued and softening in terms of demand trends for the month of March. Overall, growth in Q4 was mainly largely led by good growth coming in from buyers, both new as well as repeat buyers, and increase in terms of high ticket growth, high value size products as well for the jewelry segment. What was leading the growth for the company. Watches segment too has seen a strong growth coming in, 41% growth in watches segment, mainly led by strong growth in the analog watches and wearables business, which has seen a 3 times growth on a year-on-year basis. Eyewear business also saw a growth of 22%. Company's emerging business has seen a healthy growth, so that was a leader and growth prospect coming in and supporting the growth for Titan. Overall store additions for Tanishq is in line with the guidance as well, which the company has given. So yes, decent number coming in from Titan. We will be keeping an eye out on how that moves in trade. But Adani Wilmar, on the other hand, volume growth, high teens is the volume growth coming in, but value growth in terms of revenue, that's seen a decline in high single digits, mainly on the account of mid-teens revenue decline for the edible oil. Weakness in edible oil was mainly due to the lower demand from bakers and frying businesses, which is keeping a bit of a subduedness in terms of the edible oil volumes as well. They have remained flat on a year-on-year basis. Food FMCG business, strong healthy growth of 40%. Industrial essentials also has seen a growth of around 60% plus in terms of the growth there. Other than that, the company said that in terms of outlook, they expect the demand for packaged oils and staple foods to remain quite healthy. And going forward, the company will be focusing on further expanding its rural distribution channels as well.
Thanks very much, Vinny, for giving us all of those updates. Let's move right on then and hear it out from Pankaj Pandey what his outlook is on the real estate sector as we slip into a very short break.
Real estate, sentimentally, till the time interest rates do not come down, our sense is that probably this space may not really sort of do well. Our top pick in this space is Brigade Enterprises. I think this is one company which has very little leverage on the residential side and has been sort of doing very well both in terms of execution and also has got triggers in terms of monetization of the hotel properties as well. So I think that is our topic. But like I said, till the time we don't really get a sense that the interest rates are going to sort of soften from current levels. Probably real estate, despite giving or delivering one of the highest sales in the last 8-9 odd years, may not do so well. A lot of other positives are also sort of panning out when you sort of look at the share of organized peers. Now that is crossed 20%. So I think you have structural positives in place. I think what is required is probably the softening of the interest rate for this entire space to outperform.
Let's take our conversation forward with Sandeep Sabharwal. We've got Kunal and Naresh walking us through the technical picture. Sandeep, it's been a good comeback by the bull. 600 points on the Nifty, about 1500 points on the Bank Nifty. Is the so-called spring rally over?
Spring rally already over.
No, I'm asking you. Do you think it's over, or you think it's still some more legs to go? These days, 600 points is considered a rally.
Yeah. So bounce backs have become rallies these days. So I think market rally just started. I would think that given the overall outlook on rates, given the pessimism which surrounded the overall market construct post the US banking issues and the kind of global cash positioning with investors, etc., and the still pessimistic news buzz which is continuously around, the markets have, I would think, more upside potential than downside risk at this point of time. I would still think that not only in April, but going forward over this new rally which has started, unless and until we get some shock which we cannot foresee at this point of time, should rally should last for a few months, not just a few days.
So let's address the big one, Sandeep. A stock where you've been constructive of late, Tata Motors. 1, 2, 3. There are 3 brokerages who've had change of view, change of heart ever since the global dispatch numbers of JLR have come out. Do you think Tata Motors could be the stock of the year?
It's very much possible on the large cap side on a percentage gain prospect, because even now many of these analysts who used to be so positive on Tata Motors 2-3 years back with target price of 800, 900, they are still at 450, 500 target prices. So it's not that the analysts are extremely gung-ho on what's happening. So I would think that if the turnaround sustains the way it is and their focus on cash flow plays out, it should do well. And it's an underowned stock today from being very overowned 2-3 years back. So the upside potential is much, much greater than downside. So it could very well be the stock of the year. The risk in Tata Motors is that all of us read about the price cuts which Tesla is taking all the time on the EV side. So how that impacts other car makers' profitability is something we need to monitor. So the overall profitability, the overall construct of the story remains very strong. But the kind of upsides they'll get will depend on how much profitability improvement they can deliver.
Sandeep, hi, morning. The kind of commentary and updates that we're getting from the real estate sector really seem to be spelling out a very rosy picture. For instance, Sobha today has put out the highest ever sales value that's grown 32% on year. We spoke with DLF. We know the kind of numbers that they have clocked in. What's your outlook? Is there now interesting opportunities within the real estate space, or have they already run the course?
Shawan, we need to look at two things. One is that there was this 31st March deadline for high value real estate transactions because of the tax exemption cap which was put in the budget. So that would have had a disproportionate impact on property sales and registrations in March. So that could ebb off this quarter. So I think that's something we'll need to watch out for. Other than that, the resilience shown by the real estate sector has been quite amazing and actually much better than what I would have thought on an interest rate up move cycle. So yes, I would think that real estate sector has opportunities. So as far as picks could go, the market leader DLF, it's clearly shown a lot of resilience and buoyancy in the new sales from the new launches as well as old properties that they hold. So that could do well going forward. And then Mumbai-based real estate companies, they haven't fallen so much. So that and on the high value side, that's where they could get impacted near term. So that's something we'll watch out for. Other than that, most of the companies have been reporting decent numbers, so we need to make our choices.
Now, what do we have on SGX? We've got a 15-point cut on SGX, but that's perfectly acceptable given the fact that we've had a very, very strong rally. But in totality, if you add Friday's change into SGX back, net markets are set to close in the set to open in the green. I beg your pardon. Net markets are set to open in the green because while we were short on Friday, SGX actually was trading on Friday. So SGX is indicating a muted start, but Nifty actually could start well in the green. 60-point adjustment is what you should actually account for when markets will open. Nuresh, let's spend a minute and try and understand Tata Motors because it's turning out to be the big story, at least this Monday morning.
So technically the stock has been on radar for quite some time. Hopefully today is the day where it starts getting into that breakout mode. So if you look at the charts, 380, 400 was a support zone for the stock for quite some time. In the last 6 months or even a year roughly, 460 to 450 has been a tough zone for the stock to cross. Every time it has faced a lot of resistance. It tried to cross in last year but could not go beyond 490 and we were back to that lower end of the range. Last 3-4 sessions, the stock has made a strong move. So very strong indication that eventually that 450, 460 mark goes off and we go towards 530, 550 levels initially. So technically positive on the stock. Today a good close would be a strong indication and say would be an opportunity to buy.
Okay, that's the view coming in on the charts. But we were talking about real estate, so let's get in Vamakshi then to talk about Sobha's latest Q4 updates. As I said, they have achieved the highest ever quarterly sales value in Q4 as well as the highest ever annual sales in FY23. Vamakshi, break it down for us.
Well, absolutely. Sobha has reported a really good performance in the fourth quarter as well as for the financial year. Now, most real estate players were expected to report a record booking value in FY23 and that has indeed transpired for Sobha. When we look at its annual sales, the company has achieved its highest ever annual sales of 5,198 crores, which is an uptick of over 34% on a year-on-year basis. Now, when we look at the quarterly sales, that too have been the best ever quarterly sales with a value of nearly 1,463 crores, up nearly 2.7% sequentially, but more importantly, up nearly 32% on a year-on-year basis. As far as average price realization is concerned, in the fourth quarter, that saw an improvement of nearly 19.8% year-on-year to 9,898 per square feet. As far as FY23 is concerned, average price realization was up by nearly 16.7% as compared to FY22. Now, when Bangalore is a very important market for Sobha and Bangalore sales volumes was up nearly 4.4% in the fourth quarter and contributed nearly 63% to the overall sales that we saw. The company also launched 3 residential projects in the quarter gone by and 2 of those projects are based in Bangalore. And in fact, in the fourth quarter, the company has forayed into the Hyderabad market with its first ever project called Sobha Waterfront in Hyderabad. So overall, it's a very strong update that has come in from Sobha.
It sure has, and on Friday's session as well, the stock was a mover. But what about cement? Because, channel checks are now suggesting that there's been no meaningful price hike, which was taken pan-India in the month of April so far. Ashish joins in with all the trends from the sector.
Well, yes, so Investec conducted a cement channel check, and on the back of that, they've come out with a report. First up, they've spoken about price hikes. They say that although we have seen a lot of announcements come through with respect to price hikes, these announcements have not actually translated into price hikes, and that is a concern. In fact, they say we have not seen any meaningful price hikes so far pan-India, except a few pockets, the likes of Hyderabad and Nagpur saw effective price hikes so far in the month of April. If we talk about region-wise, in the northern region, Delhi, Chandigarh and Jaipur witnessed no change in pricing in the first week of April. However, there is an announcement from mills of price hike up to 15 rupees per kg in the month of April. If you look at the southern region over here as well, Hyderabad is the only place in the southern region where cement prices have increased by about 30 rupees per bag. However, in the rest of southern region except Karnataka, there is an announcement of price hike to the tune of 30 to 50 rupees per bag. Talking about the central region then over here as well, no price hikes have been undertaken so far in the month of April. However, there's an announcement to increase prices by about 10 rupees per kg. So the moot point being, although announcements have come through with respect to price hikes, we've not seen those announcements translate into actual price hikes.
All right. SGX and the dollar index, they both are favorable. Sandeep, are we in for a sell the rumor and buy the news rally for IT? Normally it is buy the rumor, sell the news. Could it be the reverse for IT because numbers are due this week?
It's very much possible if they don't disappoint too much. So I think a small amount of disappointment in the guidance for FY24 is built into the stock prices. But a larger amount of slowdown is not built in. For example, if the companies say that will grow by just 5-6%, that's not built in. But if they say that will grow by 8-9%, so I think then the reaction could be positive. So which way it will go, it's very tough to say because the dynamics are such that everything indicates a sharper slowdown in outsourcing and IT spending. But whether it will play out or not, we'll have to see. So what you are saying could play out if the disappointment is less.
Sandeep, but the interesting bit this time is that Infosys for the first time will be speaking to the press and to the analyst fraternity after key exits. Ditto for TCS. For the first time, they in a sense would be openly talking about the implications and how Rajesh Gopinathan's exit would really be factored in. So in terms of criticality, how critical are these two numbers?
I think TCS, it's more about continuity. So I don't see that so much of impact of CEO change on TCS per se. Infosys has had a key exit, but these are very large companies. So I think they would have systems in place. So CEO changes where the CEO comes from outside, I think those are typically more disruptive.
Move right on then and get you some more news and updates and an ET Now exclusive. Neogen Chemicals, well, the company is coming out with an announcement, and we understand that they're likely to announce a tech transfer agreement with a Japanese major. Let's understand the details. My colleague Ajay Sharma is on top of that story and now joins in with the latest. Ajay, what are your sources telling you?
Well, that's correct. Neogen Chemicals is one stock which will be in focus through the day today because our sources are telling us that Neogen Chemical is on the cusp of announcing a very big technology transfer arrangement with a Japanese conglomerate. It's a very large multi-billion-dollar Japanese conglomerate which is in chemicals and many other industries. But this arrangement with Neogen Chemical will be announced today after 3:30 p.m. after the market hours. There is a press meet called for by Neogen Chemical, but we understand from our sources that this press meet is going to be around the technology transfer arrangement with this Japanese major. The technology which will be utilized will be for EV electrode manufacturing here in India. Up till now, if you observe that the EV electrode demand is surging very sharply, the EV numbers, the sales numbers were far higher than the ICE engine sales numbers even for the month gone by. And bulk of the companies like Ola Electric, Amazon, Exide, all of them actually take EV electrode, import EV electrode from now. By the PLI advantage, the company will be able to manufacture EV electrode domestically. So this will be a very interesting development for chemical majors like Neogen Chemical. So watch out for, our sources say that this big Japanese major is about to make a splash in domestic EV electrode manufacturing. Thank you.
Right, okay, Ajay, we'll leave it at that. That's an exclusive coming in from the 18-hour stable. But let's also get you some fundamental ideas. And Neeraj Devan as well, here's what he's betting on. KRBL is a stock that he likes.
Yeah, the stock I want to recommend today is KRBL. So they are one of the largest rice millers and basmati rice exporters. So recently, we've seen a good build-up in inventory. The company procured 47% more paddy this year, and even the price has gone up by 15%. So the company, which is expanding into regional rice also, has announced a capex of about 250 crores approximately to be spent over next 2 years for increase in capacity of regional rice, which sells as a premium to the normal rice in the market. So the expansion in the margin will happen because of improvement in the price of the basmati that we've seen. Plus, the growth will come because of increased inventory in basmati and the regional rice capacity which will come from this year and increase in the next couple of years. And plus, the company has a Saudi business which was hit earlier because the dealer was not there. So they've not wanted a new dealer. So there's improvement in business from Saudi. Plus, the company is even looking at appointing another dealer in Saudi. So there will be even continued improvement from the Saudi business. So all this together will translate into a top line growth of 20 to 23% over the next 2-3 years, plus improvement in margin that we're already seeing should continue over 22 to 24, about 470 basis points. So if I value this company at 11 times 1 year forward, I get a target of 415, which is the return of for 20% plus over the next 1 year. So I recommend this for investment for medium to short term.
All right. In conversation with Sandeep Sabharwal, our technical experts, and we're taking stock of where essentially markets could move this week. Now, this is a big week because you've got numbers. It's a truncated week. It's a week where, in a sense, the real test of the market would be there. There are three things in my book, and Sandeep, just hear me out. Please feel free to disagree. There are three things, at least in our book, where Indian markets were underperforming. A, valuations. They were extended, they are no longer extended. They are not cheap, but they are not extended. B, inflation. Looks like worst of the inflation print is behind us. So that's concern number 2. And concern number 3 was flows, which have been slightly erratic, but they're stable than what we've seen at least in this year when it comes to FI flows. So these three concerns, Sandeep, were in a sense dragging the markets down. Have those concerns been addressed according to you?
Yeah, I think valuation concerns are largely addressed because India has underperformed so much and other markets have gone up. So valuation differential has come down substantially. And the froth also has gone out to a very great extent where very fancied, high-flying speculative stocks have seen decent correction. So I think that's one part. The second is that inflation was not such a big concern in India. I think it was more a global phenomena. So because relative to where we used to be globally on inflation, where we are now, we are much better off. But hopefully that those issues will not be talked of after the RBI pause. And flow, as far as flows go, I'm not so concerned because most of the flows from foreign investors tend to be from global emerging market funds, where most of the other emerging markets did so badly last year that there were continuous outflows, and India also saw continuous outflows. Now that, and typically flows chase performance. Now that most markets have stabilized, many emerging markets actually up 10 to 15% this year, we could see a reversal in emerging market flows going forward. And as a result, we'll see positive flows here also. MF flows continue to be positive. And on top of that, if we get positive FI flows, then markets could actually do better.
Inflation, valuations, muted flows, these are three concerns which in a sense have been really dragging the markets down. Kunal, this week? Will it be HDFC Bank? Will it be Reliance? Will it be both? Will it be none? Objective type of question.
I was thinking of a few more other options, but I think if I have to pick out from the names that you mentioned, I would probably pick
I said none. I gave you an option.
No, it could be
HDFC Bank, Reliance, both or none.
No, I think I was looking out for other stocks, other set of stocks.
Okay.
I think out of the
Others
options,
is your option, right?
yeah. So Reliance is what I would pick. I think that's a stock which I would believe can stand to significantly outperform this week. So the mojo is back for Reliance Industries. I think that was the missing point for the stock price. The participation the stock has seen in the last 1 week, 10 days, in terms of two strong, big candle moves as well as very good volumes. The leadership is coming back for Reliance Industries, and the impact it has, of course, on the Nifty, both in terms of sentiment and the weightage. I think we all know that. So I think all of these factors indicate that Reliance Industries is the stock to watch out for.
Naresh, let's get in your take as well on RIL, as well as some of the other heavyweights that were supportive. For instance, L&T as well has been having a fairly decent run-up over the past month or so at 2274. Your outlook?
So I'll start with the Reliance Industries. The stock is back above that 2300 mark now. 2180 was the bottom back in February, March of last year. And that bottom has held on. So again, we are back into that range bound move. Now, the trend changes once it sustains about 2400 to 2450, which was the high in the last 2 months. As well as that's a pivot point. If that breaks and sustains, we could go towards 2750 also. But overall, the trend is still sideways to say a little bit of a drift up on Reliance Industries. So would be a buy on dips with a stop loss at 2250. Expect a move towards 2450 first and then review. L&T on the other hand, I've been recommending the stock quite a few times over the last couple of weeks. If you look at the stock structure, the stock has gone into a new 52-week high or very close to it. Technically, the stock made a very strong base around 2050 to 2100 levels. In the corrections also in the current market conditions, the stock did not correct much. That's the first indication of relative outperformance and now a breakout. So our ideal target price for the stock would be roughly closer to 2600 in the short term. The last range for the stock was 2050 to 2300. So that's the way we calculated. And even now at current levels as well as on dips, L&T remains a buy. And it's very clear it's not just L&T, it's the whole capital goods and related segments which have done well, whether it is large cap or small cap. We've seen Siemens do well. ABB is close to a 52-week high and all-time high. So clearly capital good space remains a leader, and now L&T has the catch-up to be done, which I think should continue towards 2600.
Sandeep, good Q4 updates from both Godrej Properties as well as Shobha. In any case, the Bangalore market has seen a very peak appreciation when it comes to realty prices. So that, of course, is going to be one segment which is going to be in focus. Other than that, of course, the gas names as well. Remember, the new gas pricing mechanism for APM gas has been announced over the weekend, and the Kirit Parikh committee recommendations have been taken up. So CNG as well as PNG prices have been reduced. It's MGL and IGL which continue to be in focus because of this, and also ONGC and Oil India, for whom it may not be as beneficiary a move. So this entire segment is going to be in focus. Then, of course, this Titan as well. Strong growth in the non-jewelry business is what they witnessed in the fourth quarter. Typically, it's always jewelry which actually leads the performance for them. Having said that, jewelry revenue has come in higher by 23% on a year-on-year basis. Sandeep, Titan, a story you track. What's the take here?
So Titan has been one consumer company which has actually been defining what's been happening in the rest of the consumer space. So some contribution from the new businesses, but jewelry actually has been doing very well. So I believe the numbers which they have delivered are above most analysts' expectations. So that will have a positive read through on the stock performance. But the stock's something which has not corrected at all. Like most of the consumer stocks actually fell quite substantially. Some are near 52-week lows. And Titan has not fallen. So I think near term, because of the valuation, the upside could be capped. But then downside is also limited given the way they are performing.
Right.
I want to go back to NBFCs. Why NBFCs? Well, in a rising interest rate environment, in the first leg of interest rate hike, banks will always do well, the ones which have got a strong CASA. So PSU banks, HDFC Bank, ICICI Bank, those do well because they have a good CASA. But when interest rate they peak out, or when they're nearing its peak, and when the demand in the economy is solid, whether it is credit offtake or the bent of the economy, then NBFCs will start coming back, because they in a sense will be able to raise liability, and they in a sense will be able to go on to the path of aggressive lending, looking at the construct of the economy. Sandeep, is it time now to switch gears and go back to NBFCs purely because NBFCs are a play on interest rate cycle?
Yeah, so what you said was right, that a rising interest rate scenario benefits the big banks with a strong CASA franchise because cost of funds in CASA don't go up. And when the interest rate peaks, it's the smaller financials, consumer, like autos, real estate, etc. Those companies tend to benefit more. Some impact of that we saw in stock price movements on Friday after the RBI pause. I would think that some of the stronger NBFCs should actually do much better going forward.
You coming in. Meantime, do you have a take then, Sandeep, when it comes to some of those gas stocks with respect to now with these new norms, new gas pricing norms, what it means for some of the CGDs? Any view on individual stock recommendations?
No, unfortunately, I haven't invested in these stocks.
Now, having said that, you've been tracking the spurt that we saw last week in the gas names, right? Further up move?
Yeah, I think IGL is the strongest name from the pack. MGL is following it up. Gujarat Gas has been an underperformer. So I think out of the three names, the chart patterns, the volumes, the breakouts are pretty much in favor for IGL. So we can expect the stock to continue to lead or maybe tend to outperform the rest of the pack. MGL has been a stock which has been a bit more inconsistent in terms of the price trend. So the stocks have seen historically breakouts for itself, swing breakouts, short-term charts. But then the stock tends to reverse also quite immediately from a breakout. So that gives an inkling of a sense that the stock is going through a false breakout mode. So, but then the stock recovers also very swiftly from those levels. So it's been an inconsistent chart. IGL is what I would prefer from the pack.
I want to go back to that very basic question with you, Naresh. If we are in for a trending market for next couple of days, where do you think the market leadership, in a sense, will be the highest?
So I would say over the next couple of sessions, it is more about mid caps and small caps. In the large cap space, it would continue to be the leaders, which is where Reliance, HDFC Bank, the heavyweights could do a little bit of a move. But for the next few sessions, at 17,600, 800, a little bit of a pause is necessary. So I would go with mid caps over the next few sessions rather than the large caps.
Sandeep, what are the chances that in general small and mid cap stocks, the ones which are dominated by HNI investors like you, they in a sense will now start making a comeback? Because if the confidence to trade long is coming back, then some would argue that suddenly the value hunters would be they would be treasure hunting in the small and the mid cap space.
Yeah, I think that's something which will happen, and the probability that the mid cap space could do as well or better than the large caps overall is much greater, because a lot of people became pessimistic, a lot of money went out, a lot of money was on the sidelines. And whenever money looks to come in, it tends to be more on the small and mid cap side, at least from the domestic investors.
Let's get in your outlook then, Sandeep, as to what the sense is when it comes to the entire commodities or metals basket. Owing to the fact that we have seen some of these names as well see a comeback, do you believe that one needs to be a bit selective when it comes to the metal space?
One should be selective or largely avoid this space, because it's a globally linked sector where global economic performance matters more than what India is doing. And globally, economic growth outlook is not so great. India, the growth outlook is much more steadier. So it's better to focus on domestic oriented stocks at this stage and not try to invest in those stocks, because I think next couple of years are not going to be great for metals.
Get in those pre-open rates then, and just about flattish, down about 1/3%, but holding on to the 17,500 mark thereabouts on the Nifty, and for the Sensex, flattish, down 76 points. Let's find out mid-cap strategies then from our chartists. Naresh, your top bet?
So looking at BHEL, this is a stock which has done nothing much in the capital goods space. The stock is making a reversal candle from the recent lows of 68. So it's a risk reward trade here. Good reversal candle seen last Friday. I would expect this to be a stock which could go towards 80 in the short term. A risk reward trade in the bottoming outside of it. So a stop loss at 68 and a target price of 80.
Okay, Kunal, your mid-cap idea?
Well, I'll be extremely bullish on DLF from the real estate pack, giving a breakout about the 380 mark, strong volume push, breaking past about the 200 moving average after weeks of consolidation below those levels. So all factors triggering into extreme positive for the stock. Would be bullish on it. Targets of 400, and then would revise it upwards on a scalable basis. Top loss at 370.
Okay, let's also tell you what else is happening outside the world of markets. An American auto major, Tesla, has announced its new mega factory in Shanghai, in China, with an aim to construct or start construction during the third quarter of this year. And production is also set to start halfway around the world through 2024 as well. The company has also gone ahead and slashed its EV prices in the US for the 5th time since January in a move to spur demand. Also, KPMG LLP was sued as SVB's auditor along with underwriters including Goldman Sachs, Bank of America, Morgan Stanley in an investor lawsuit based on alleged misstatements leading to the bank's collapse. Now, according to the lawsuit, the defendants misrepresented the strength of the company's balance sheet, liquidity as well as position in the markets. Also back home, Meghalaya Chief Minister Conrad Sangma has been heading the group of ministers and recommended the highest 28% GST on betting, casinos and horse racing, differentiating between games of skill and games of chance. In fact, the group of ministers is also expected to freeze recommendations only after the introduction of the IT intermediary amendment.
Meantime, the Finance Minister is in the US for a week-long official visit. She will be attending the 2023 Springs meetings of the World Bank and the IMF, along with G20 meets, investor meets and bilateral meetings and other associated meetings. Meantime, India has tested its COVID preparedness with a 2-day mock drill, which is set to be carried out over today until tomorrow. The Union Health Minister will be overseeing the drills, and with cases on the rise, he has asked that states follow the test, track, treat, vaccinate strategy with utmost focus on COVID-appropriate behavior. And in the world of sport, the Kolkata Knight Riders snatched victory from the jaws of defeat against the Gujarat Titans, chasing a mammoth 205. KKR were down and out with just 1 over to go, needing 29 runs in the final 6 balls. But Rinku Singh made the impossible possible, hitting 5 sixes over the last over.
And how is expected, or rather India expected to fare from here on? Morgan Stanley's Rhythm Desai shares a very bullish note, says that he expects returns from equities to enter a period of better returns. So what are the themes that he's betting on? Pankaj is here with a summary of the same. Pankaj?
Well, thanks for that. If you just look at really what report has come in from Rhythm Desai of Morgan Stanley, he's saying that from October 21, the returns have been absolutely stagnant as far as Indian markets is concerned. And then when you have the month of Feb and Jan, you actually saw relative returns actually falling down quite a bit as far as India versus rest of the world is concerned. But on the other hand, they believe that macros in India are actually improving, and that's why they believe that equities are now entering a phase of better returns, or you could expect some positive returns from here on. One is the improved macro, as we spoke about. Second is after the Feb and the March sort of decline, the valuations are looking much attractive. And 18 months or 20 months is a substantial time as far as a time correction is concerned. In that also you have seen some growth coming in. However, they don't see an all-out sort of a rally. They believe that it's a stock pickers market, but it's too early to call that it's a big macro trade where you just expect anything and everything to go up. So they have some preferences. They believe cyclicals would do well. That's something which is their base case scenario, versus defensives, versus small and mid caps, and then the larger ones. So cyclicals is what they are betting on, where there is earnings growth visibility as well as valuation comfort after the recent correction.
Okay, let's also, look at some of the other buzzing stocks. And of course, the gas stocks are one that we're going to be keeping a close eye on. Then, of course, you've seen quite a bit of Q4 updates coming in, very strong ones from the Realty Pack, or for that matter, even a Titan, which has posted extremely healthy Q4 and update. The jewelry revenues have come in higher by about, I think, 28% or so on a year-on-year basis. And the non-jewelry segment is the one which has actually been quite the performer. So extremely strong growth coming in there as well. I stand corrected. The jewelry revenues have come in higher by about 23% on a year-on-year basis. Strong update from Godrej Properties, strong update coming in from Shobha. There's also RVNL, which has emerged at the lowest bidder for one of the projects worth about 380 odd crore rupees. So this is going to be another stock in focus. Credit Access, wherein the dispersals have come in higher by nearly about 24%, and the AUM has also risen about 26.7%. These are a couple of stocks which are going to be actively tracked in today's trading session. In fact, quite a move coming in on Credit Access. Neogen Chemicals, which Ajay reported on, that stock starts off lower by about 1% as we speak. But Kunal, we also saw good move coming in on the smaller NBFC pack, on some of the smaller banks as well. Wanted to understand whether you're spotting any opportunities on the tier 2 and tier 3 banking and financial names, or stick with the large caps.
So as of now, the move is more prominent in the larger cap names. I think HDFC Bank, HDFC Limited, ICICI Bank, these stocks made a very good comeback in the last 3-4 days specifically, where the price candles, the volumes for these stocks were quite strong as compared to the likes of, say, for example, from the private sector banking names. Federal Bank is still going to a bit of a corrective phase from 130. The stock has come back towards 125, 127. So that stock is going through a phase of correction. IDFC First Bank somehow has been languishing at this 55, 56 odd mark, plus or minus a couple of rupees for itself. So no major price trends for IDFC First Bank. Even for the PSU banking stocks, I think there's hardly been any major recovery, whether it's the likes of Canara Bank, Bank of Baroda, or even the non-FNO stocks like Indian Bank, etc. There has not been any major price breakouts for themselves. So I would probably stick to the larger cap names as of now. And as of now, the charts improve for the mid cap tier banking names, whether it's the PSUs or the private sector banks. We can probably generate more alpha from those breakouts. But as of now, I think large caps is where I would probably get it till towards.
To the index calls then, let's find out what our chartists are betting on by way of a strategy on the Nifty as well as on the Nifty Bank Index. This, remember, after we gained about 1.5% last week. No trade, says Naresh. Kunal says that it's a hold recommendation. By the way, the pre-open rates now reflecting a 17,600 print on the Nifty. For the Nifty Bank Index, that's a strategy, buy on dips and no trade, according to Naresh.
Okay, KRBL, Brigade Enterprises, and we've already given you the index trades from our technical experts. The differentiating factor this week, if last week was RBI credit policy, this week would be numbers. But my sense is that the Reserve Bank of India pause or the surprise, I don't think is fully captured in. We did see a reaction and a bout of short covering in banks, largely post the credit policy. But I think the implications of that is something which markets will take some time to really digest. If interest rates have peaked out, if they have, that means that we've seen worst of the inflation. And we are talking about inflation like never before in the world. And if inflation like never before peaks out in India, then that automatically means that now markets know a terminal value at which they can start discounting earnings. Markets pretty much know that which way demand vectors would move now that you have a sense on home loan rates, car loan rates, and also the corporate rates. So one important aspect which has been dragging us down is inflation. Second, valuations which are not that stretched. And third, flows which have been muted in 2023. But could we see that changing? So it's an advantage bulls. I'm not making a case that there is going to be a, post a bounce back, there is going to be a rally. But the market texture certainly is pointing to better days and for a solid April. Unlike last time, This time the positioning of India is uniquely different because after this recent bout of underperformance and the fact that one more quarter of earning is now baked in, everybody is talking about FY24 and 25 estimates. FY23 is now passé, given that FY23 from a market standpoint is already over. Nuresh, do you see popular themes like defense, railways, they will also make a comeback or they could take a back seat?
So in terms of a comeback, some of the stocks have bounced back. But if you look at, say, railways, look at the way a Titagar wagon continues to hit a 52-week high. RVNL has made a bounce back. So railways continues to be a theme. Defense would be selective now, given that a lot of stocks had made up a 2x and a 3x move. But there are still a couple of stocks which still looks very, very, very promising in the defense space. One is Bharat Dynamics, which continues to be a consolidation. Second is Bharat Electronics, which has earlier been the best performing stock over cycles in the PSU basket. So there are still names there in the defense side. Small cap names have also done well, but those are a pretty illiquid ones. So the theme has continued. The longer term trend is still there. It's just become much more stock specific rather than everything going up. It's some particular stocks still doing well. So railways and defense is a theme which could last much longer.
Kunal, railways, defense, popular themes, will they make a comeback?
Yeah, they're making a comeback in their own way, Nikunj. It's not that all stocks are moving up higher, but then I think few of the stocks from each space, for example, from defense, it's HAL which is outperforming, the likes of Cochin Shipyard, BEL. These stocks are chugging along. They have recently broken past about their 200-day moving averages. Railway stocks have been a bit more divergent as such. Titagarh Wagon, stock which we've been bullish on few months back. That stock has been an outperformer. Tex Macro Rail is underperforming. So it's very divergent in terms of each individual sector. So you have to really take on the high momentum bets on each of the stocks rather than betting on the underperformers.
All right.